What is up, y'all? What is up? What is up? What is up? Can y'all see me or no? What's up? What's up? Tracy, Ingrid, Felicia, Teresa, Amanda. What's up, guys? What's up? What's up? What is up? You guys can't see me, can you? What the heck? Me. Guys, what's up? What's up? What is up? You guys can't see me, can you? What the heck? Uh, what's up? Wait, y'all can see me? What the heck? How can y'all see me, but I can't see me? What is going on? Y'all calling me Prince out here. Hold on. I'm not gonna take this abuse. All right. I'm gonna stop the whole session. So, hold on, y'all. Hold on. I gotta figure this out. Y'all can see me though. What the heck? How can y'all see me? No, I can't see me. This is blasphemous. What's up, y'all? What's up? What's up, Andrea? Lorenzo? I mean, I'm probably gonna take it off anyway. I'm probably gonna take my cam off anyway. Like, y'all don't need to see my face for this. Teresa, Coach Max, it ain't here, girl. This is my session. I'm gonna run this session the way I want to run it. Coach Max ain't here. You can tell her I said that. What's up, Breezy? And she ain't coming either. No, this is my session. I want to do a session for you guys. That's all. I want to do this session for you guys exclusively with Moi, your favorite light skin trader. That's all. What's up, guys? What's up? Well, beautiful people. I can't see myself, but y'all can see me clearly. That is it's profound, actually. It's profound. So please invite some people. It's gonna be a good class. Clearly what y'all wanted was if we look at the by popular demand here, what did y'all want? Y'all wanted, let's see here. On I'll let y'all vote, and the votes say 43% how to compound small accounts. And then 25% is zones and market structure. So what I'll do is this is going to be primarily focused on compounding, entries, exits, small accounts, how to work a small account. And then I'm also going to go a little bit into zones and market structure as well, too, since that's like, number two. I'll go a little bit into that. How's that sound? Sound like a good plan? Is that what y'all really want? Is that what y'all really wanted? Did y'all this is what y'all wanted? Y'all want to compound small accounts, huh? What's up? What's up, Sabine? 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 Sherry, what's up? Grace, what's up? Anita, what's up, y'all? If I mess up your name, please forgive myself. I'm not good with names all the time. All right. But what I'll do, guys, I'm just letting you know, I'm gonna give it like probably 6 more minutes, 6, 7 more minutes to get people in. I'm gonna make a post. Let people know we're live. We're live, schmive. Okay. And then we'll start. Go get your water. Go get your snack. All right. Let me post it everywhere. Dun, 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 dun. Premium. There we go. Okay. And we're gonna go over compounding small accounts, and then zones, market structure, all that good stuff. Mm, 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 mm. I actually put together kind of like a small little PowerPoint for you guys. You know, a little something, something. I kind of put some stuff together last minute again because I didn't know which one you guys wanted. So I put together some stuff for you guys for the compounding of small accounts. I kind of whipped up together a little PowerPoint for y'all. It's like a bunch of things that definitely I feel you need to know when it comes to compounding. So I took a lot of things that I put together, put in a jam packed in a little PowerPoint that'll probably take maybe 8 minutes to go through, maybe like an 8 minute PowerPoint. And then we'll go into the charts and we'll just look at charts, and I'll give you guys like real life examples, show you how I scaled in certain trades this week, show you where I scaled in, how I compound, and stuff like that. Interesting stuff, right? Yeah. Interesting. Very interesting. So get people on this call, right? We got like 5 more minutes. People should be on here. I should have more than 147 people. It's ridiculous. I need more. I need more. More. Give me more. Can y'all really see me? I can't see myself. Can y'all really see me? This is crazy. It's crazy. Yo, this is a brand new computer. What is going on? Stop cam, turn it on, and it's like, what? I don't understand it. I can't see myself. Maybe I should leave and come back, but I'm scared if I leave and come back, it'll get shut off. This some tomfoolery. I'm gonna take off my face anyway. Y'all can laugh at me while before we start, and then I'll take off the camera anyway. So I can't even see myself. What's up, Erica? What's up, homie? Tiff, what's up, Tiff? Grace, Brown Eye, what's up, y'all? Val, what's up, Val? Susan, how are you? Laura, how are you? What's up, guys? Good to see you here. Good to see you here. Yeah. Good to see you here. And like I said, guys, I'm gonna go over like a quick little PowerPoint that I put together for you guys last minute because that's what y'all wanted. All right, and then we'll go into my charts. All right, then we'll go into that. I don't think, have I done a compounding class? I don't think I really did. Interesting. Have I done a compounding class, y'all? I don't think I have. Very interesting. Very interesting. I'm definitely gonna teach some stuff. I'm definitely gonna teach some stuff that you guys probably have not seen yet. I promise. This is all like, all right, figuring out what you guys need, and I whipped up a quick little PowerPoint for y'all. All right, whippy whippy. We whipped it up real quick. Okay. Let me see. 160. Okay, I guess we can start. What's up, Amanda, Sandra? Okay, y'all cool? What's up? Y'all good? You ready, Tiff? Tiff said I'm ready. Vivian, what's up? Levita, what's up? Shirley, what's up? Fidencia, Miss Fiden, what's up? What's up? How are you? Don't be calling me handsome on the live. All right, y'all giving me compliments and stuff. Don't try to get me in my bag. I'm gonna get extra light skin on this call. Don't make me feel too good today. I appreciate that. All right. All right, y'all. So let's get started. Let's get it started. Okay, let me stop. Let me just stop right now. Let me just stop right now before I go too crazy. All right. Let me see. Okay. Uh, okay. All right. So this is a very quick PowerPoint. Y'all ready? It's not too crazy. Y'all ready? All right. Let's share. Let us share and start, beautiful people. There you go. All right, so I'm going to go into the PowerPoint, and then we're going to go into the charts. All right, so let's start. Thank y'all for hopping on with me. Appreciate that. All right, let's go. Share screen, window, and here we go. How come I can see myself now? What the? This is weird. I can see myself now that I shared my screen. This is really weird. I look really weird now. I don't even like the way I look. I'm taking my camera off. This is ridiculous. Anyway, taking it off. All right. Y'all ready? Let me see here. Okay, cool. Share. Wait, no. What am I doing? Oops. Here we go. Y'all ready? Yo, I haven't really taught this. So you better be happy. All right. This is what y'all wanted. This ain't what Ryan wanted. This is what y'all wanted. Okay. So by popular demand, I'm here today. Beautiful people. And I got my triple screen set up so I can see the chat as I'm talking. So it's like it's so sexy right now. Anyway. All right. You guys can hear me? Testing 1, 2, 3. Let me get all these notifications out of here because I don't want to see none of this. And You guys can hear me good? Out of a one out of 10, how well can you hear me? You guys can hear me good? Good. 10, 10s, 10s. You know, we dime pieces out here. You know what I'm saying? Everything's a 10. Everything. All right. Welcome, guys. Thank you for hopping on to this beautiful compounding masterclass hosted by yours truly, Ryan DeFreitas. And on this Saturday evening, right, Memorial Day weekend, and you guys don't have to be here, but you're here, and for that, I must entertain. I must make you love this class because you could probably be doing something else right now. So I'm gonna try my best. Well, I'm not gonna try. I'm literally just gonna do my best and make you guys have some fun with me while we learn some things. Okay. All right. So let's start. Okay. So when we're talking about compounding, all right, let's talk about what is an entry. Okay. What is an entry? All right, guys. So number one about compounding, it's all about entries. Okay. It's all about entries. It's all about exits. Okay. Because you have a small account. And what I consider a small account is anything under like $500. If you have, I'm talking to the people who have $50 account, $100 account, $200 account, right? Like, how do you build that up to a couple thousands of dollars? And obviously, if you're going to do it fast, you're going to over leverage. There's no way around it, right? But how do you do it in an intelligent way, the best methodical way, and in a way that actually makes sense? And I can tell you from doing it a lot, there are certain things that you want to do, and there's a specific way you want to build your small account. Okay, so let's just start with entries and exits really quick, right? What are entries? Entries are when you as a trader decide to enter the market, when you hit the buy button, right? Every time you click the buy or the sell button in Forex, the market is considered an entry, right? So you go to a chart, you hit buy or sell, that's your entry, right? That's number one. Okay, cool. What is an exit in the market? Okay. An exit is when you, the trader, decide to exit the market. When you decide to close a trade, whether it's in profit or it's not, it's considered an exit, right? So when you buy and then whenever you get out that buy, that's your exit, right? Or if you sell, whenever you get out of that sell position, whether that's 5 minutes, 5 hours, 5 days, 5 years, it doesn't matter. That is your exit, right? So it's just understanding that when you're compounding, especially on a small scale, on a very small account, these things have to be more precise than a bank or someone who has a large amount of capital, right? If you have 20,000 or 30,000, you don't have to be as accurate as someone who has $200 or $100 in your account. So I just want you to understand, by you starting with a small account, you are already putting yourself at a disadvantageous position in the market. Okay, that's just what you're doing. Just, that's why it's always easier to put more money into the market, because you don't have to go as aggressive. But if you're starting with a very small account and you want to compound it, pretty quickly, you're forcing yourself in a squeeze. Okay? But pressure makes diamonds, baby. You understand? So we're gonna do it anyway. Because sometimes it's all you got. Let's just be real. So, how important are entries and exits in trading? And I always use this analogy. Okay, on a scale of 1 to 10, how important is it, guys? Exits and entries. Again, it's everything. Okay, you should be constantly always trying to get better with your exits and entries. And I'm speaking from experience. It can always get better. I literally just got better with my entries and exits a couple weeks ago. you know, literally, it's I'm always trying to improve. It never it's never like, oh, I get perfect entries and exits every time. No, you only get better and better and better over time, over chart time. Okay. So you need to literally make it everything in your trading when you're doing when you're compounding. Okay. You need to act like your life depends on your entries and exits. And the analogy I love to use, okay, because I do love this show, is do y'all know what show this is? Hopefully y'all can see. Do y'all can anyone put in the chat what show this is? Do y'all know? Let me see if y'all know what show this is. It's on Netflix. Come on. Stop playing with yourself. Right? Teresa, yeah. Mm-hmm. Yeah, it is recording. Everything is recorded, guys. So this is gonna go right to the YouTube right after. Yes, Squid Games, guys. Right. So in Squid Games, right? This was a game. This was a game, right? And it's a game for your life. So all these people here, if anyone who hasn't seen this series, it's on Netflix called The Squid Games, right? It was super popular. And it's about a game for your life. So, my bad, guys. My daughter's going crazy. I had to check on her. So, literally, the Squid Game, right, is literally a a show where it's about winning about I don't know like hundreds of millions of dollars, right? It's I think it's like close to a billion. I don't know, but the whole point is they're playing this game, and if they lose, they lose their life, right? But if they win a huge, sack of money, right? And that's usually, or that's the analogy I like to use with like the market, right? Is like, when you're trading, that's it's your livelihood because that's what you're putting money, which is energy, into the market, right? So you're putting your time, you're putting whatever you worked for into that. So it's really like your life, right? And based on how you handle that, whether you win the game or not, you're going to be able to compound, win more money, right? Or you're going to lose the money. And the money is essentially what? Time. And what is time? Your life. Put it together, y'all. It really is. So when you lose money that you worked hard, when you worked hard for that $2,000-3,000 and then it's lost, you lost all that time and energy that you put into it, right? So you have to take it with that type of seriousness when you're trading. Like, yo, like, this is my energy, my time, my money, everything that I've worked for to, put this into account. So I need to take trading seriously. You can't just gamble and be lackadaisical with your trading. And for those of you who take it really seriously and start to really have more structure and get to the next level, you're going to realize, like, okay, this makes sense. This is why a lot of people don't make it in trading long term, because they cannot get the seriousness and develop the mental fortitude to really push through trading, because it does not come easy. And you have to understand that it's just a transfer of energy. Okay, so it's not easy. Okay, but once you understand that, you'll handle it with more care. Okay, and that's why I'm saying entries and exits are going to be the starting point of compounding. You have to master entries and exits. If this isn't something that you want to do, if you don't want to compound, cool. But if you want to compound, it's going to begin and end with entries and exits. There's nothing else really that matters more. Okay, so Can y'all hear me? My bad, y'all. Car going crazy. That was outside. Okay, can y'all hear me? My bad. Was I on mute the whole time? My bad, y'all. My bad. Okay. So did y'all hear when I was talking about the 4 to 6 confluences? No, you can. My bad, y'all. My bad. I didn't realize I was muted. I'm seeing the chat though. If it happens again, let me know. My bad, y'all. My bad. Okay. Okay. So what I was saying, right, guys? Okay, just to run it back. When it comes to the confluences, right? The 4 to 6 confluences, you need to know how many confluences you are having before you enter a trade. So what I mean by that is if you see a good setup and I say, hey, there's a good sell, right? And you're like, yeah, I'm selling it. And you start to sell it really heavily. Let's say you start to, go heavy on position, add lots or whatever. And it's only 2 confluences, but to you it looks good. But is it good? There's a difference. There's a difference between, oh, the setup looks good and the setup is good. You see the difference? Because now you're not operating out of a place of feeling and intuition, but more of clarity. Y'all understand? Right? So everything has to be kind of like written down and cemented. Like, okay, if I have 4 to 6 confluences, I know for me personally, that's a good trade. But there's been trades that I'll take 2 or 3 confluences and still win, and it looks like a really good trade, but I don't have a lot of confluences, and I'll take a 3 confluence trade and it'll work out, or a 2 confluence trade and it'll work out. But I know those are not high probability trades. Okay, so I'm not going to go as heavy. Does that make sense? So rule number 1 when it comes to compounding, have a number for your own strategy. And for me personally, it's 4 to 6 confluences. I would advise at least 4 to 6, if not more confluences before you get in the trade. Okay, that's number 1. Okay, let's go to the next one. Same thing with exits. So for exits, for me personally, I don't need a lot. For me, I'm looking for maybe 2 to 4. Okay. I don't need like 15 confluences to exit a trade. I need less confluences for the exit strategy than my entry strategy. Okay. All right. Does that make sense? Does that make sense, y'all? Okay, cool. All right, let's keep it going. So keynotes when compounding and creating a trade plan. A trading plan is a roadmap on how to trade optimally, and not one trade should get placed without a well-structured plan. Again, when it comes to compounding, even compounding, guys, you need a trade plan. And we went over that in the past and all that, but I'm just reiterating it because even when you want to compound your small, let's just start with $100 account. And I'll give you an example, and I'm going to go on the charts and show you, like $100 account example and how to compound that. Okay, like how we would scale into it. What type of trades are we going to look for? When are we going to look for these trades? Like what lot sizes are we going to lose? I'm going to go through all that today. Okay, so the trading plan is written down and followed. It is not altered. Work the plan until the plan works. All right. So again, with the 3-week mentorship and 6-week mentorship, there's so much stuff that we're going to teach you that we haven't taught at all. There's new things that we're going to release to you that no one in the, I don't want to say in the industry, I'll say 99.9% of the industry doesn't even know about, that we're going to release in the 3-week to 6-week. And I'm not, as they say, capping. Okay. All right. I'm not lying to y'all. Listen, there's some things that we're going to teach you that 99% of the industry doesn't even know. And a lot of that comes with the trade plan stuff that we're going to teach you. Like when we show you how we really make our trade plan and how we optimize it to make your trading better. Like your trading will get better just by default by getting your journaling and trade plan in order. Just doing that properly, your trading is going to 10x because you're going to see what you're doing wrong every single day. So, yes, I'm teaching you guys how to trade plan, but some of y'all like, well, I'm writing it down on my phone, I'm writing it down on a spreadsheet, and it's still not helping me see things. Okay, cool. And that's a good place to start, but I'm going to show you how to finish, how to really up your trade plan and journaling to the next level so you can really get to that trader that you want to be. Okay, but a good place to start is at least, and it's what I use, or at least where I started was Google Sheets, or if you want to be super cheap about it, just on your phone, go to your notes and just write down everything that you need. And this is again for those who are super broke and like still just trying to get their feet wet in trading. Start somewhere. You have to have a trade plan. It doesn't matter how you do it, when you do it, just start it. Okay, you have to. I wish I would have started my trading career with a trade plan. Okay. So lastly, a trading plan includes strict entry and exit rules, as well as risk management and position sizing rules. The trader may add additional rules at their discretion to control when and how they trade. Right? Very simple stuff. Okay. Not rocket science. Okay. Now let's talk about breaking up your entries. And this is something that I personally do. So this is my philosophy. All right. My philosophy. All right. And this is how I trade when I compound. And some of my personal students know this. So I will break down how I enter trades with each percentage. Okay. So right here, aggressive entries. And listen, for some of y'all who are seeing this and can actually understand it, it's going to propel you when you're trading. I promise you. For some people, it's going to go woo, above their heads. Some people's like, oh, snaps, But number one, aggressive entries. This is when you get no real rejection or confirmation, you risk 1 to 2% on your trade. So this is when you go aggressive. This is like when you get that pullback and it's like, oh, snaps, I think it's going to go out, but I don't really have confirmation. Okay, you risk 1 to 2% on your account. And again, we're talking about small accounts, guys, right? Because if we're trading a $100 account, I'm talking you risk like $1-2 on this entry. Okay, so it's not a lot. We're talking even, let's say, $1,000 account, you're risking $10, $20, right? Very small, right? We're not talking about actual real management, Okay, we're talking about small accounts, right? And you're trying to build it. So number two, normal entries. This is when you get some type of rejection, confirmation of trend or market reversal. You're going to risk 2 to 3%. Again, I'm going to show you the differences between all these entries. I'm going to show you the difference, and some of y'all are going to love it. Or not some of y'all, all of y'all are going to love it because I said you're going to love it. You better love it. All right. Number three, confirmed entries. Confirmed entries are when you get strong rejection of a zone or market structure. And that's usually when I'll put 5% or sometimes even more on the trade. Okay, so depending on the type of entry I have is going to determine 1%, 2%, or 5% of my account. Does that make sense? Right, y'all? So every entry is not the same. Haha. Okay, so just because you see me trade, sometimes I know post results or, and you see different lot sizes at different levels, and it's because one entry is aggressive, another entry might be confirmed, another one might be normal, right? And based off of which type of entry it is, I have the percentage allocated for that. Okay, so that is how you want to start to alter your mind when it comes to compounding. All right, because you're gonna always get a bunch of different entries, but what type of entries? Is it aggressive? Is it normal or is it confirmed? Confirmed entries are the best entries. All right, these are the entries that we love. Okay, this is when we can go heavy. This is when we go 5%, and again, that's not a lot on a $100 account, $5, right? But if you have $5 on top of like another or normal entry, $2 on top of another aggressive one entry, right? Then you have like $8 you're risking probably to make like $16, $20, right? And if you make $20 on a $100 account, that's 20%, right? So even though that doesn't seem like a lot, that you just came up 20%, right? So that is how you structure your entries, right? So write this down or take note of it, okay? Because this right here is one of the biggest keys to compounding. You can't treat all entries the same. Okay, cool. So I guess, wait, hold on. I'm just making sure I ain't skip anything. Okay. So, okay. Ways to better your entries, exits right away. I bet y'all. Computers like being weird. Excuse me, sir. Okay, there we go. Ways to better your entries and exits right away. All right. Learn to draw your zones, support resistance properly so you can predict more accurately where the market will bounce off of. All right. Number 2, never rush your entries. Never rush. This is a big thing when it comes to compounding, guys. You cannot rush. Oh my goodness. Oh my goodness. It's I'll tell you this right now. Rushing will be your demise. Okay. And that's why patience pays in this game. 9 times out of 10, you will experience some type of drawdown. So just wait for healthy retracements in the market to enter instead of rushing it. And you have to always anticipate drawdown. That's something you have to be comfortable with. Anyone who tells you, oh, I never get drawdown, and it's just like I get perfect entries every time. What's drawdown? I never go more than 2-3 pips drawdown. They're lying. They're lying. Don't buy the hype. Don't buy into what they're telling you because it's completely fake. You're never gonna be like, oh yeah, every trade is like perfect, no drawdown, 50 pips. Whoa, like no, it doesn't work like that. That's not real trading. Okay. And if that happens 1 out of 10 trades, good for you, whoop-de-doo. But you're not doing that every time. And you shouldn't expect that every time. That is a false expectation. And that's what's going to lead you to fail because you think that you have to be perfect. You don't have to be perfect in this game. You have to be profitable. There's a difference. Okay. You don't have to be perfect. You have to be profitable. So think about it like this. Leave yourself cushion so if the market just pulls back on you for some stupid reason, which it does sometimes, right? And I can show you guys examples on the charts. You have some type of buffer. And for me as a new trader coming in the game, y'all, I used to think, oh, I have to have these, tight stop. I have to be like 5 pip stop loss with 30 pip TP and make myself look good. And, and I'm not gonna lie, I would hit that and it will make me feel good. But there was a lot of times where I would take losses because it's like I have such a tight stop loss. It would hit my little 5-6 pip stop loss and then go in my direction. And I'm over here pissed because I'm like, yo, I had the direction right. It just hit my stop loss. And I'm sitting there pissed, watching the trade run in profit. I'm like, dang, I would have made thousands of dollars today. And instead I lost 1,000 or 2 or something. And I'm like, now I'm mentally defeated because I'm like, oh, what the heck? It happened so quick. And that used to happen to me. Right. And I'm sure a lot of you guys can relate to that. Right. So one thing, especially when it comes to compounding, small accounts, you cannot have these super, super tight stop losses. Okay. You cannot have these 3, 4, 5 pip stop losses, even 10 pips. Like I'm talking to my intraday traders who the majority of you guys are, I would say, scalping intraday and swing traders, but more so intraday, right? And if you're going for that intraday move, you don't want to, get comfortable doing these 6, 7, 8, 10 pip stop losses all the time because you're really hindering your profitability. Okay. I would much rather you as a trader, and I want you guys to really, really listen to me. Okay. I would much rather you be 90% accurate with one-to-ones than 70% accurate with one-to-twos. I would much rather, all right, so I'll say it one more time. I would much rather you be 90% accurate with one-to-ones. You risking 20 pips to make 20 pips, or you risking 30 pips to make 30 pips, or you trade gold, you risk 50 pips to make 50 pips. Then you be 90% accurate than you being like 70% accurate on one-to-twos. Now, granted, the one-to-twos will actually probably pay you better. They'll pay you more, they'll pay you better. But what most people aren't realizing is that when you lose trades, it hits you psychologically, mentally, and it frustrates the hell out of you. Hello, somebody. Somebody gonna feel it, right? Like y'all when you take a loss, right? Sometimes it could be a stupid loss, y'all, and it's gonna affect you mentally. Does it not? Do you not now the next trade that sets up, you're like, dang, let me be extra careful. And it like sometimes it can mess you up because you've taken 2 or 3 losses beforehand. So now when you see a good setup, it's like you don't even have the same type of enthusiasm. You don't even have the same, hey, let me get in right now. I see that. Like you'll see it and you'll sit there and watch the move. You're not even, because you're trying to be so conservative because of the losses. Right? So for me personally, again, I'm speaking from experience and from what I see with my students, guys. The students that win more with a less risk to reward ratio have a way better trading mentality and health in their trading overall. Because I think most of us just want to be more accurate. It's not about getting the 1-7, the 1-8 risk rewards. It's not about going crazy and I risked $1,000 to make 8,000 and it hit like the lottery. It ain't gonna happen all the time. Okay, it's not. Stop it. Who lied to you? Somebody did. Okay. Not saying that it can't happen. I'm just saying it's not going to happen all the time. Every day. No, it's not. Okay. So for you as a trader who's going to trade, let's say every day, every week, every month, you want to focus on what's consistent, what works every day, every week, every month. So getting your trade down to like a 1-to-1, I would say max 1-to-2 is really the threshold you want to do, especially compounding small accounts. Okay. And I'm going to show you that on the charts. But hopefully you guys understand. Does that make sense, y'all, what I'm saying? Do y'all feel me? Hopefully you can feel me on this. Okay. Michael says, speak to me. I'm speaking to you, Michael. I'm speaking. You feel me? I'm speaking to you, bro. Of course, Andrew, I hear you. So true. I'm learning. Gotta smell us. Yeah, Andrew, that's how it is, man. Agreed victim. It's okay. It's okay. Look, we're gonna go through this together, y'all. All right. So here's some more notes really quick, and then we're gonna get onto the charts. Okay. So it's like 2 more slides, and then we're gonna go to the charts. So each pair, and this is just more notes I thought you guys would appreciate. Each Forex pair has its own natural tendency, right? It should be traded correlating to its own session time. And I preach this all the time, right? Each pair is different. So you cannot, as a trader, think, I'm going to trade your 31 day, trade AU, and then I'm going to trade gold and trade them all the same. It doesn't work. It does not work. You cannot use the same exact formula, maybe the same skeleton, right? Maybe the same structure, right? But it's different. Each pair is different. So you have to study that pair. And especially when it comes to your smaller accounts, that's why I tell you guys to back test your main pairs, right? Your 2 to 3, 4 pairs, whatever that is. It doesn't have to be a lot. It doesn't have to be 10. It can be more than 1 or 2. But I'm saying you need just a few good pairs that you can count on, that you have studied. Okay. And this is why you need to understand your trading style, your scalp, intraday swing, whatever you are, and trade according to the pairs that best accommodate those needs, right? right? So if you're a swing trader, you know how you're going to trade, right? If you're an intraday trader, you know you're going to probably hold a trade for a few hours. If you're a scalper, maybe for a few minutes. For me personally, when I start compounding, I'm definitely in between that scalp to intraday type of trader. It's, I'm in between, kind of in the middle of a scalp and intraday trader. I'm not really holding for just a few minutes, but sometimes I won't hold it for a couple hours. Sometimes, the trade will close in 15, 30 minutes, if that makes sense. 1 hour, 2 hours. So somewhere in between, that's how I compound. Okay. Master your risk management. Some keynotes about risk management really quick. Always know how much you're risking before you enter the trade, right? So you have to know the lot size. You have to know what you're risking beforehand. Always have a stop loss. You have to. That's the only way you know your risk is with a stop loss. Okay. Do not trade a pair when you don't understand the risk. Again, I want to sell Litecoin, Ryan, on my $100 account. Okay. Well, do you know the risk on your 0.01 there? No, I don't, but I'm just going to put a 0.10 and hopefully, I make like $1,000 on this on your $100 account. Yeah, Ryan, I can do that, right? I mean, my entry's clean. And yeah, yeah, you can. Go ahead. 2 days later, Ryan, I blew it with Litecoin. I'm like, I didn't see that coming. I had no idea that was possible. Yeah, for you to trade Litecoin or Bitcoin with a lot size that you clearly don't know, and to blow your account. And it's happened to me, y'all, for sure. It's happened to me. So that's why I'm trying to tell you guys that every single mistake that you guys have made, I've made myself. And, I've had to learn from it, obviously. I had no choice. I had to figure it out. Okay. So, what we'll do is now we'll go to the charts. All right. Hold on. We're going to go to the charts. All right. Let me see here. We can close everything. All right. All right. So let me see if there's any questions on that. Let me see if there's any questions so far on the PowerPoint before I move on. Gotta pay attention to broke. Yeah, exactly, Andrew. You definitely got to pay attention to it. Zell intraday. Yeah, I'm more of an intraday trader, guys. So if you like the way I trade or you see me trade live, and even if you've been on the Asian session, guys, right? That's like an intraday style. You guys see it all the time, right? Like that's how I like to trade. I'll hold a position for 30 minutes, hour, 2 hours, usually be done. By the time the session is done, usually my trade should be done. Usually, 9 times out of 10. Let me see. Okay. All right. So let's go to the charts, guys. Okay. So let's start. Let's start having the fun. All right, because this is what you guys needed and wanted for so long. And I guess we're at like 8 o'clock. So I guess perfect timing. And I guess a good example would be what would be a good example here? The AU buy, well, that definitely was a good example. Let me see, NAS. We have the NAS drop. Or no, that's the UJ drop actually. I know the NAS buy was definitely a good scale in. Okay, let me give you an example of a trade I did today actually, or this week. I can find AU. Let me see on which one did I have it. I gotta. Let's see if I have any good ones for AU. No, not really. We did that by. This was on Friday. This was a sell. Yeah, I guess we can do AU on. This was London. I'm just trying to find a good example for y'all. I guess we can do it. This AU move, or I'm trying to figure out a day that actually. I don't have my chart marked up though on the days that I traded this week. Besides like that, I think I deleted it. I think I deleted because sometimes I do that. I delete the risk rewards. I don't even see it on the charts actually. I don't even see it on the charts. Oh no, that's not fun. All right, let's just okay. I guess I can't find the setups that I took this week, but I do know them. So let's go over AU. And if you guys remember from what was it yesterday? But if you guys remember I told y'all like, look, did I not tell y'all that AU was gonna go up and it was gonna break this wedge? Did I not tell y'all that? Did I not tell y'all that? Did I not tell you AU's going up? It's going to go up. Up, uppity, up, uppity. It's going up. All right. I told you I was gonna break that wedge. Once it breaks the wedge, it's going up. Like it's going up. Anyway. Let's delete all this junk and let me give you an example. Okay. Let me give you an example. All right. So a good example is actually we bought bought AU around here. Okay. That was actually that was for sure a trade I took. I just didn't hold on to it like I should have held on to it. But let me show y'all. Okay. So let me give you a good example of how we compound or start a small account. Okay. All right. So I'm gonna write some notes for you guys. Okay. We're gonna let's rewind. I'm gonna write some notes for you guys. Okay. All right. So let's say we're compounding a $100 account. Okay, because that's what this class is about, compounding small accounts. Okay. Compounding small accounts. Okay. So we're going to take an example, $100 account. This is what we're going to use as an example, all right, for these trades here. $100 as the example. All right. So if you have $100 in your account, you're like, I'm trying to get this thing to like 500 by the end of the week or something, Ryan. Like I'm trying to, I'm trying to get this a couple hundred or 1,000 or something, even just 200-300 at the end of the week, double, triple it or something. Like just something would be good for me. Okay, cool. Let me break it down for you. Okay, so here are the rules, right? So we're going to put rules. Okay, then we're going to say number one, uno. Okay. Make sure you are trading your pair at the right time. Okay. AKA time confluence. Okay. That's number one. That's number one, right? You have to literally make sure that you are trading the proper time. Time confluence is everything. everything. All right, y'all. It is everything. Okay. It is everything. Hold on. Hold on a second. All right. Okay, you guys hear me? Okay. So number one is time confluence. Okay. Number two is trade plan. Okay, so number one is okay, make sure you're trading at the right time. Right? Are you trading your pair at the right time that it should be traded? Because every pair correlates to the time, is on a time schedule. You can't just trade AU whenever you feel like it. You can't say, oh, it's 12 o'clock today in the afternoon. Let me just trade AU because I like trading AU. No, it doesn't work like that. Okay. Your trade plan, right? So once you're in the right time, you're like, okay, it's 7 o'clock, 8 o'clock, Asian session time. I'm going to trade AU. Okay, cool. Boom. Then you check your trade plan. You have to have a plan for your compounding. Okay, what's your risk, right? So you have to figure out for yourself how much you're going to risk per entry. What's your risk? Okay. Some of you want to risk this. Okay, this is what I would, again, this is what I would suggest. And I'm going to write this out for y'all again. Aggressive, under 2%. Okay. Normal entry, 2 to 3%. Confirmed. Really dropping gems for y'all. Some of y'all just don't even know. Confirmed entry, 5% more. Okay. So when you have your trade plan, okay, then you're gonna go to your, okay, what's my risk? Okay. And then this is how you structure your risk. So every entry that you take, every time you hit buy or sell, you need to say to yourself, is this aggressive, normal, or confirmed? Every single time. And I'm going to show you the differences. Okay. Aggressive is it's what it sounds like. It's aggressive. You have a good chance you're going to lose it. Okay. So you don't want to go heavy on an aggressive entry. And that's the problem that most people do. Okay. Is that they'll buy AU or something like this, right? And then it drops hard or something. Let's say, I don't know. It starts to drop, like right here or something like this, right? Like right around here. And then if you buy it right here, okay, like as it's dropping and you don't have any real confirmation and it's just like it's gonna go up, but it dropped really hard. Okay, that's aggressive. Okay, that's aggressive. All right, you don't have any really confluence, but it's gonna go up, and you have just that intuition that, hey, this thing is gonna go up. Okay, that's aggressive. Okay, and there's nothing wrong with aggressive entries. I take aggressive entries all the time. The difference between me and most people, though, is I know how to structure my aggressive entries and correlate it to my account. So I won't take, if it's aggressive, I'll do like 1-2%. If it's confirmed, I'm going to put a whole lot more. Okay, so you see, like that's an aggressive entry, right? Now we're on the 10-minute. It's like consolidating. It's popping up. Okay, it pops down a little bit more, right? Aggressive entries is like you're trying to get that crazy wick. Like this could be like an aggressive entry right here. All right, let me buy right here. It's aggressive, right? You don't have any confirmation, nothing like that, and you buy it, right? And then once this thing starts to pop here, and like we're on the 15-minute, okay? and we get like a 15-minute bullish engulfing. Maybe you have your zones drawn out and you have other confluences. Again, it's just, I'm not going to go through everything, right? But let's just say you have your confluences here, whatever it is. Let's go like right here, right? It starts to reject that area a little bit more. Okay. Then you're like, okay, I like it. Okay. Oh, wait, hold on. Wait. Can you guys hear me? Okay. Bruh, I don't see the chat. Y'all calling me? It's not sharing? Y'all don't see nothing. Y'all calling me like crazy. Hold on. Okay, hold on. Okay, my bad. My bad. Can y'all see now? No, I really wasn't seeing the chat. Do I gotta redo that whole thing? That's crazy. Okay. Y'all were blowing me up on Telegram. How do y'all not see it? What the heck? Okay, can you see it now? Well, thank you for y'all calling me, because like 3 of y'all called me. And I'm like, okay, y'all are blowing me up on Telegram. Okay, can y'all see? How did y'all not see it? This was on the whole time. Okay, can you see now? Now start over? That's crazy. Okay, we about to start over. Whoop, whoop, whoop. All right. This is like, okay, here we go. Y'all ready now? Y'all can hear me and see me now? Horrible. But thank y'all for calling me on Telegram, because clearly that woke me up. No, I can't see the chat, y'all. I can't see the chat. I can't see the chat right now. While I'm trying to teach this, I couldn't see the chat. Let me see. I'm gonna try to put it back up now. Okay, now I can see the chat back again now. Okay, you good? I'm gonna start over. Okay. All right, ready? So here we go. So I'm gonna go over this really quick. Y'all ready? Okay, cool. So compounding small accounts. I'm gonna put this in the middle of the screen. Show y'all. I can see the chat now, y'all. Thanks for calling me, guys. Okay. Compounding small accounts, $100 as an example, right? So here's your rules, right? You make sure you are trading your pair at the right time confluence. It's one of the biggest things that you need to have, okay? As far as a trader, when you're trading your pair. Number 2, you go to your trade plan. What's your trade plan? Okay. Your trade plan is essentially your whatever your starting capital is and what you're trying to get. Okay, if I'm trying to take $100 to $1,000 by the end of the week, and I'm going to trade every single day, let's say Monday to Friday, then what do I need to do? What do I need to do? Okay, well, the quick way to figure that out is to go to Compound Daily, right? Figure this stuff out. You gotta figure it out. You gotta do the math. Okay, cool. If I do, let's say 20%, let's say a day, or not a day, but let's say or yeah, for the 5 days. Would that be enough, y'all? No, it won't be. But you need to see the numbers though. Okay. So if you did 20% on your $100 account, it would be $248 by the end of the week. So you have to say to yourself, okay, I need a little bit more. Let's go for 40%. So if I got to hit 40% a day, okay, that would make me $500. Okay, damn, I need a little bit more. Okay, cool. Let's see if it was 50%. Okay. And okay, cool. And right, so okay, I need a little bit more. All right. So let's break it down. Let's say if we did 60%. Okay. All right. So if we did roughly 60% every day, Monday to Friday, on $100, you'd have $1,000 by the end of the week. You see how you break it down? Everything has to be broken down systematically. You have to know these numbers, right? Because what happens is when you have your $100, right, and you are at $160, it doesn't feel like a lot. You're like, damn, I'm only at 100. I only made $60, but technically, you are on track to do that if you did that every day to hit your $1,000 goal. You feel what I'm saying, y'all? Right? So if you hit that 160, you know you're on track, right? And you have to break that down into bite-sized pieces. Okay, how can I hit that 60%? Right? You have to think to yourself, okay, how much am I going to risk? Am I going to trade 1 session a day, 2 sessions a day? How many sessions am I going to trade this week? You have to know all those things, right? So for me, I'm trading roughly maybe 4 times a week, 1 to 2 times a day. So I'm usually trading 4 times a week, 1 to 2 times a day. So I'm trading anywhere, I would say, between 6 to 8 sessions a week, usually 6 to 8 sessions. So for me, I would put 8 because I'm trading like 8 sessions. So for me, if I did, let's say 30% in 8 sessions per session, okay, then I would be at $800. So for me, I'd have to hit like, let's say 40%, and I'd hit, 1400. Okay, so you have to figure this out for yourself. Okay, which I'll drop the link for that in the chat real quick for y'all. Cool. Does that make sense, y'all? Right. So you have to figure out your numbers for yourself. Okay. And you can break it up into, okay, well, that how much do I have to risk per trade? Okay, because what is my game gonna look like? So now you're probably gonna have to play around and risk 5-10% per trade. Like, so you're seeing like how you don't have a lot of room for error here. Because if you take 3-4 losses and they're all like 10% or something like that, your account's going to be down. Okay, so when you're, again, this is small accounts. Okay, for me personally, that's why it's all about your entry. Is it aggressive, normal, confirmed? When you have confirmed entries, that's when you go heavy. Anything less than that is like you're being conservative. So you go conservative on your aggressive. You can go a little higher on your normal entry, and then on the confirmed entry, that's when you're going to go heavy. That's when you're going to get the bang for your buck and really actually get the compounding started. But you can even get in on aggressive entries. And when you have the combination of all these three things, that's when you're going to actually make like 20, 30, 40% gains in a day, in a session, on a trade. It's really when you're scaling in a combination of all of these entries. So like, let me give you guys an example, right? And this is what I was showing you guys, is when you go to, let's say we got here, let's just say that we're on the 15-minute chart. Let's just say, okay. And let's just say you bought right here or let's just say AUDUSD is gonna go up and you bought right here. Now it's dropping. It's aggressive entry, right? It's not really like, so this was the level that we drew. Okay. It hit this level, and because it tapped this level, you're like, oh, I'm gonna buy it. So this is where you buy it right here. Okay. And you don't know if it's going to continue to break the zone and drop back down here and then go up possibly to like this next level here, right? You don't know if it's going to drop even harder, but you have a good, let's say, intuition feel. So you're like, I'm going to put like 1%. Okay. I'm going to risk like $1 on this, like really, really low lot size, right? You're like, because I know it's going to go up, but it's aggressive entry. I'm just going to put like a 0.01 here. Okay. But let's just say then it holds. Okay, cool. Right. And then now you're getting rejection. 15-minute bullish engulfing happens. It starts to reject your zone. You have your other confluences, and now it becomes a more confirmed entry. Right. So now when you buy here, guess what you're doing? You're not going to put a 0.01 now. You're going to put a 0.05 because now you have a confirmed entry. Right. So then when that goes up, right now you have the combination of the 0.01 and the 0.5 running. Do y'all see what I'm talking about? Right. So when you have all of these entries, right, scaled into each other, you're gonna have a small aggressive 0.01 here, a small 0.01 here. So stop thinking like, oh, I can't make 10% or 20%. Yes, you can. You just have to do it methodically. So when you have an aggressive entry, you put a 0.01. When you have a confirmed entry, you put a 0.05. When you have a normal entry, you're going to put a 0.02. Does that make sense? Right. So then now when you're scaling into all these trades and it hits 20 pips, okay, and let's just say like you have another entry here, like you're going to easily make like $20, $30 on one trade in one session. We're not even talking about you doing 2 trades in one session, or we're not even talking you do 2 sessions in a day or whatever, right? Now things start to become clear, like, okay, I can actually do this. It's not as hard as you think, but you have to do it methodically. Okay. So that's really how I break it down. Let me give you guys an example of what, let me see. I'm trying to give you guys a good example on AU. I think when I bought it, or did I sell it for? I think for agent session I sold it up here for like 30 pips. Yeah, this was like 30 pips. Yeah. Okay, so let me show you guys. This was actually an example I did. It was like I think it was Wednesday. Okay, cool. So check this out. All right, I'm gonna give you guys the play-by-play $100 how I would treat $100 account, how I would scale in it, so you guys can really see what it looks like. Okay. So again, we're taking my baby, my favorite pair AU. Again, if you guys are new to trading, I highly suggest you start trading AU. It's one of the easiest pairs to trade. It's not super volatile. You can get some consistency. AU is like the layup. You can consistently get layups before you have to go start doing shooting the 3-pointer and the foul shot and all the crazy stuff. Learn the fundamentals, learn the basics. But if you're struggling with all these crazy high volatile pairs like GJ, gold, US30, crypto, and you're getting busted and it's beating you up, well, maybe it's because you need to slow down and go to slower moving pairs. Again, and this is if you're intraday trader, scalper, this is just my advice. Okay. So let's just say we want to sell AU and we're waiting for AU to kind of break structure here. Let's see, like on the 30-minute, 45-minute, 1 hour. Okay, cool. On a 1 hour, it's like, right. So we have, let's say here, after the 1 hour engulfing on AU starts to break structure. Actually, yeah, I remember this trade. It was really clean. Okay. And I did start to sell AU here. All right. So, all right. Where would I target? Clearly, the first target is back into this structure level here, right into that zone. If you just need more clarity, then just go to the line chart. You'll see clearly, right on the 1 hour, back to this zone here. A lot of support resistance areas right here, right? So it has to at least come down to that area, close to that area. All right. So this is like my target. This would be my stop loss, which was like 15 pips. Just basically above this high, give it a little bit of wiggle room. Nothing too crazy, right? That's a pretty conservative stop loss for AUD/USD, 15 pips, guys, right? Especially if it's only going to move like 20, 30 pips. Okay, nothing too crazy. Now on the 15-minute chart, this is how it looked, right? And for me, when I'm scaling in on my trades, I'm trading smaller accounts, you can't swing on $100 account. Okay, let's just be honest here. You're not gonna swing trade for 2-3 days on $100 account. Okay, you're gonna scalp it and you're gonna intraday trade it. You're not going to swing. Okay, swing traders are for those privileged people who have bigger accounts. You're not gonna get anywhere swinging your $100 account on a 0.01. It's not gonna happen. Okay, so if you're trying to build your small account, you have to really get in the mindset of I'm really trying to get my money and go, tip and dip and just be out of here, in and out, in and out. Okay, not like high frequency trading, like you're in and out like 2 pips. That's like robots. That's EAs. They do that. My in and out pip and dip is like, okay, you grab your 10, 15, 20 pips, you're done. Grab your 10, 15, 20 pips, you're done. Like over and over and over again. That's really what you should shoot for regular currency pairs. If you're going to trade gold, I would say between 25 to 50 pips. If you're going to trade NAS, I would say anywhere from like 30 to 60 points. And those are just all of my main pairs that I trade and what I'll go for. Okay. So for me, let's say we have this 1 hour engulfing, on AU, everything aligns perfectly. What would you guys say this is here? So now let's go to like our entry, which let's say is like a 10-minute. Okay. And now we have a bearish engulfing here. And then the second candle hits this area, starts getting bearish too. What would you consider this entry here? Okay. I want you guys to tell me. Hold on. Let's where's my box? Here we go. I want you to put 1 for aggressive, 2 for normal, or 3 for confirmed. Okay. That's all I want you to do. So again, what entry would this be? 1 for aggressive, 2 for normal, 3 for confirmed. And I'm going on the 10-minute chart. And let's say we sell it right here. What would that be? Talk to me. What would it be? Oh, let me see. Let me see what the chat says. Let me see. Anita says 3. Angela says 3, 3, 2. We got some 3s. Okay, we got some 1s. Let me see. Hold on. I wish I could do a poll. That's what I need. Let me see. 3, 3, 3, 3. Y'all saying 3s. Okay, hold on. I'm trying to see what the majority is. 3s, 3s. We got some 1s, some 3s. We got a few 2s. Mick said 2. Squirrel said 1. Okay. Some of my students are on here. Y'all cheating because y'all know the answer. So y'all shouldn't be answering. It's a 3, y'all. It's a confirmed. How's it not confirmed? For all y'all for saying 1, how's this aggressive? It looks aggressive. You want to know why it looks aggressive? It looks aggressive because of the 10-minute candle and just bearish and is going down. But we have the 1 hour engulfing candle that closes, right? And it's kind of hard to show you in hindsight as opposed to in real time, clearly, But when you have the 1 hour huge bearish engulfing on 30 minutes, breaking structure is breaking this consolidation here, right? Then on the 10-minute, another entry time frame that I like personally, this is just me again, break structure here, and then the second candle after this engulfing pattern continues to get bearish. To me, this is a confirmed entry. Okay, what I mean by a confirmed entry is that it doesn't have to be a perfect entry. So that's something different, guys. Okay, a confirmed entry is not a perfect entry. All right, just because it's confirmed doesn't mean that, oh, it's got to be perfect. I'm not going to go on drawdown, Ryan. No, but what happens is it's a high probability trade that you're not going to lose. So basically, I can put like a 7 pip stop loss and I can almost bank on AU not hitting, let's just say 10 pip stop loss. It's not going to hit that 10 pip stop loss. That's what a confirmed entry is, guys. Does that make sense? It's like a 90% accurate, like the probability of it hitting your stop loss is little to none, but it can happen, right? Let's not think that we are immune to the market and that things don't happen and we don't lose trades, even though when we feel 100% confident in it, okay? Because that happens. But when it's confirmed, we have a high probability that this thing's going to go in our direction. So that's what that is. It's not that it's perfect, because this thing could still pull up a little bit, but we know for a fact that it should not break this level at this point because it broke it already. We have momentum. On the 1 hour bullish and bearish engulfing, we have our other confluences, whatever. Like, it should not at least break this level. So that's why it's confirmed for me. That's why I would put a 0.05 here. Okay. So let's say, for instance, we put, or actually did, I don't know when I got it, but we're gonna say this is a 0.05. 0.05. Okay. We're just going to say that right here. Oops, that's a comma. I didn't mean to put the comma. No border, no text wrap. Thank you. Okay, here we go. 0.05. Okay, cool. Now let's go to the next candle. Pulls up again. Not perfect. Let's go to the 5 minute. I also like the 5 minute candle. Okay, 5 minute, 10 minute, 15 minute. They're all kind of entry candles for me. Okay. We can look at the 5 minute here. Starts to drop. So again, it wasn't perfect. It's not like, oh, you're not going to go and draw down. But if you have, again, a conservative stop loss, guys, and you know it's a confirmed entry, you're not going to lose. Right? So it starts to drop here. Okay, cool. Pulls back up. All right. Now, what type of entry is this? If we sold it right here, what type of entry is that? What type of entry is that? Is this aggressive? Again, all right. Looking at it, and it's not too far from this entry, but if we took this entry here, okay, it's a little bit underneath our confirmed entry. What is it? And again, think about it. Is it aggressive, normal, or confirmed? Okay, so I want you to think about aggressive would be 1 to 2%, normal 2 to 3%, confirmed would be 5%, right? Let's go back to the 5 minute entry. Okay. So this pulled back, what would this look like? I'm looking at the chat right now. Let me see. Y'all saying 1, you're saying 3. Okay. This 3s. Okay. Very evened out. Okay. It's very evened out. Okay, cool. So for me, this would be definitely not confirmed. Okay. So a lot of you guys, I'm going to make the gold zones kind of like my entry zones to scale in, if that makes sense. Okay. Because these levels are like my scale in levels. Okay. So as the market pulls back into this level here, this zone here, right? It pulls back into it. Now, now let me ask you guys, has it rejected that zone? Yes or no? Has it rejected it yet? Is it retesting it? Is it rejecting it? Like what's it doing? Just think about it logically. Is it retesting this area or is it rejecting this area? There's a difference. There's a difference. Okay, think about it. All right, it's retesting. It has not rejected. So this is an aggressive to like normal entry, basically. So you would put like a 0.01, a 0.02. So let's just say we're gonna put a 0.02 right here. Okay. At this point. So we have a 0.05 here, a 0.02 here. Again, confirmed entry was here. This is like we'll say a normal entry, but this also can be slightly aggressive. Okay. And so I'm going to draw different short tools so you understand each position, right? So we sell it right here. Okay. We're going to have the same targets here. Okay. But as you see, the stop losses are different. Do you see that? Right? Because I'm lower here. My stop loss is not all the way above here. My stop loss is like above here now with this pair because we're now lower. So there's no reason the market should be all the way up here now, right? If we're breaking structure and it's going lower, right? If you guys, for those who are about to get on my trade manager, which I advise everyone to get on, it will be available next month for y'all. It will help you trail automatically. So you don't have to worry about manually moving your stop loss and all that. Like it'll do that for you automatically. All right. Anyway. So this is how this particular entry would look. Okay. Now we're going to continue. What's happening now? It's rejecting a little bit. Okay. Okay, cool. Boom. Oh, there we go. Okay. Now it's starting to drop. Okay, cool. Really no entries here. Okay. Then let's go to the next candle. All right, then the next candle pulls up. All right. Let's say that we sold right here. Right here. Is this aggressive, confirmed, or aggressive, normal, or confirmed? Yes or no? Think about it. Aggressive, normal, or confirmed? Did you put 1, 2, or 3 in the chat, right? Let me see. What do you think? What do you think? Is this aggressive? Is this a normal or confirmed entry? Y'all, okay, okay. All right. Charlotte, Angela. Barbara said 3. Linda said 2. Mostly y'all said 1. Okay. Talk. What's up, Cece? Said retesting. Okay. McKenny said aggressive. All right. What's up, Ricky? Dave said aggressive. Okay. All right. Y'all are smart. You know. Correct. For those of you who said 1, you're correct. It's aggressive. So why is this trade aggressive? Because it has not come back to a zone that was consolidating at, right, and hasn't retested the level. So again, guys, it's always levels in the market, right? It's always going to come back to previous levels. So the next level would really be like down here. Like look at the line chart, you see, right? Or you can even see it on the candlesticks, but it might not be super clear to see. I'm just showing you guys, right, that you can kind of decipher and move the candlestick sometimes, because it isn't clear at sometimes. You can go to the line chart, very easy, right? And you see here, to me, it could continue down from here, but you don't know if the market is going to sell off from right here or if it's going to pop up back here and then drop. So for me, I would want the market to pop up here, retest this area, reject it, and then I would sell again. Okay, I would sell again. Now, if it doesn't do that, that's fine by me too. If it just drops down, that's fine by me too. Okay, but what I'm going to do is I'm going to sell it as an aggressive entry, because if it holds this area here and doesn't pop up all the way up here, then I call it another good entry. And I'm going to make sure that it's light. This is not when you go heavy. And it's really easy when you're up, you know, like 10 pips and your 2 entries are running. And then you're like, oh, I'm going to get a third entry. And instead of making this a 0.01, you make this a 0.5 or a 0.25. And you start going heavy here. And this, my friends, is a no-no. You don't go heavy here. After you're in profit, you always put the lot size catered to what type of entry that is, whether it's confirmed, whether it's aggressive, or whether it's normal. Okay, so again, let's now take the short tool. Okay, and this is what this entry would look like for me. Again, the same TP. I would have my stop loss above like the second zone, right? Because it can hit the first zone and come back. That's perfectly fine, but it should not break the second zone, right? Does that make sense? Right? It could go to the first zone, which I'm expecting. Oh, why can't I use my? There we go. It could go up to this zone here. It should respect this zone though. It should not break like all the way up here. It shouldn't, because then I'd get out of all of my entries. That would mean it's breaking structure completely. Okay. So I would have my stop loss like right here, a few pips above the second zone. And then let's run this and see how it works. Okay, so now look, it popped up exactly to that zone. Look at that. right? So again, the aggressive entry, it was aggressive, but you have to give it wiggle room. Went up like 3-4 pips. Okay, cool. Right? And then let's see what happened here. Now it's rejecting that zone. Okay, cool. It even popped up one last time, hit this, as you see, hit this zone perfectly, and is now starting to drop. So now, what type of entry is this right here? Let me know. What type of entry is this right here, y'all? What type of entry is that right there? Because that's another entry right there. That's another entry right there. What is it? Aggressive entry? Is it aggressive, normal, or confirmed? Yo, y'all are so smart. Y'all are. I don't know if it's because I'm such a good teacher or y'all are just so good as students, but y'all are getting it. Okay, y'all are really getting it. Okay, so this here is a confirmed entry. This is confirmed. This is you put another 0.05 right here at this point. So we have a bunch of different entries here. We have the 0.01, which will be right here, be at this one, right? Then we have the confirmed one, which will be 0.05 here. Again, 5% of our account per entry, right? Okay. And so why is this confirmed, Ryan? It's all the way. So when you think about it logically, it's like, hey, man, like this is all the way down here. You know, how come I didn't put a 0.05 here or 0.05 here? You know, and I could have gotten made way more money, right? So a lot of you guys are probably thinking like, how come I didn't scale in 0.05, 0.05, and I would have been up so much more money because my good trading friend, you know, young man, young lady, whoever's listening to this, because you're all young in my book. All right, everyone's young. We'll all be young forever. Okay. Anyway, the point is, right? Every entry has to be categorized by the style of entry that it is, because this entry right here, again, this was aggressive. So there's no way in hell you're going to put a 0.05 on an aggressive entry. No, you're not going to put 5% on an aggressive entry. Never. Okay, because an aggressive entry, right, has so much probability that it can go up, you know, take you out, and then go. It's aggressive. It's more off of intuition. It's not like you don't have a lot of confluences. You don't have rejection of certain levels. You're kind of getting in, but you know, the middle of the level, right? So if you have like one or two confluences, that's kind of like okay, an aggressive entry. You want to go light. The reason why we put a 0.05 here, okay, the reason why we put a 0.05 here is that it rejected the zone. As you can see here, it rejected it really hard. Okay. And then broke structure right here, which was right here. And if we go to the line chart, you can also see it too. Right. So let's kind of rewind one last time so you can see. And again, in real time, kind of what happened. It's kind of harder to see. Maybe let's go to like the 3-minute chart. Maybe that would look better. Okay. So it goes up and then drops. So this is like going on the 3-minute chart. Now you're getting to something crazy. And I don't advocate going to the 3-minute chart, but I want to show you guys. All right. So that's really what happened. It popped up really quick and then rejected this level. This hold on. This one right here. That right, and then started to break structure really nicely. So then on the 5-minute chart, this is what that looks like. Right? It wicked it and then got really, really bearish. So for me, if it's breaking structure, rejecting that zone perfectly, and then again, our overall consensus, it's like, I don't know what that guy just said, right? Is that it's going to go down to this level. I'm now breaking this one trade. Look, I broke this one trade into 5 different entries already, like 4 different entries already. So when I say you just take one good badass trade and you break it down, it's like you're chopping it up into bite-sized pieces so you can slowly scale in on it. That's all you're looking for. One good ass trade. You don't have to trade 2, 3, 4, 5 pairs. You trade one good setup and you break that thing down. Okay? Brick by brick. Right? So now let's look, it drops. Okay, cool. So now let's just say we have 4 entries. We had a 0.05, 0.02, 0.01. So now let's just do the math, guys. I'll show you. Let's just do the math. The 0.05, I'll show you. The 0.05, we made 16 pips. Okay. So that's roughly, or what's that? $7? Yeah, $7. Okay, so that's $7. The 0.2, we made, let's say 15 pips. Okay, so that's like $3. So that's $10 right there. Okay. On the 0.01, we made $12. Let's say so that's 11. Okay, and then the 0.05, let's just round it to 10. It's like 8, 9, whatever. Just so for sake of argument, let's just say you made $16 off of this trade. Okay, so may not sound like a lot, but you did 16%. Okay, you did 16% easily. All right, you did well, actually, no, hold on. Hold on, wait. No, this one was this like 20 or no? Yeah, let's just say you got out of here 17. So yeah, let's just say you made like $16, right? So like 16%. But again, think about how easy, right, this 16% was. And this is just one trade, right? This was just one trade. And you didn't really go through a lot of drawdown. You didn't go through crazy. Like this was like, think about if you could do 16% every trade. Think about that. Think about if you do 16% every trade. So I just showed you how you can break down, right, your entries into 1%, 2%, 5%, right, and how you can easily turn that into a 10%, 20%, 30% winning trade based on the entry style that you have when you're breaking that trade down. Because this is gonna be your money. It's not just the trade setup. It's this right here, breaking it down to 3 to 4 different entries while it's going in the direction that you know it's going to go to. This is how you compound, my friends. This is how you build your small accounts. It's not, oh, I'm just going to buy, one time here or sell here and get out, make my little 5%. No. That 5% trade should easily be 10, 15, 20. You should be able to double, triple, 3 times your risk if you scale in properly. Okay? Very, very simple. What's up? Ooh, okay. I think I'm done. Did that help y'all? Let me see. How long was this trade, guys? Look, on the 1 hour. Look, on the 1 hour. It was 2 hours. It took 2 hours for that trade to hit. And then look, went right up afterwards. And that's, look, right after that. So it's, so again, that's why having a trail stop, my risk management software is going to help you guys a lot. For those who are VIP, you guys get it for free. I think is it 2 or 3 months? I think it's 3 months. For those who are in the 3-week boot camp, you guys are going to get access to it as well too. Not for free, but everyone's going to get access to it. In TTA, those who are in the boot camps, you guys are going to get priority. What's up, baby? What you need? Anyway.
You never noticed me.
All right. So that's really it, guys. That's really how I compound these moves, and it's really all about your management. I would say this too. When you're compounding and you're scaling in with multiple entries like this, having a management software will 10x how you're trying to scale. And that's why I developed and created it for myself. And I had no intention on selling it, no intention on giving it to people, because it was just for me. It wasn't so like, oh, I can make a lot of money. It was like, no, so I can make a lot of money. I'm not gonna create software to make a lot of money off the software. I'm making it so I can make a lot of money, you know? But it just so happened that it's like, to me, it just makes sense to give it to you guys and to share the blessing that I've been working on for like 2 years. So it will help you manage your trade automatically. So all you have to do is really just enter the trade and let the management system manage it for you. But you have to still know how to scale in properly, how to break up all of those little trades. And so when you go like to the 1 hour, you won't see that, right? But when you go to like the 5 minute or 10 minute, 15 minute, then you're gonna see all these types of areas where you can get in again, get in again. This is how you break down that one big trade on the 1 hour. Like boom, it hits TP, hits like let's say 20 pips. But then when you go to the 10 and 15 minute charts, okay, it'll show you multiple chances to get in. I'm definitely like for me personally, I easily will have 3 to 8 positions, in a trade. It depends on the pair, but I will easily minimum have at least 3 positions running on the pair, multiple different entries. Um, so it's something to just take note of. If you want to grow your small accounts, you're going to have to learn the different styles of entries and how to scale in on the smaller time frames. There's no way around it. There's absolutely no way around it. Okay. And that should motivate you. Okay. Because you can get good at this. There is a system to it. Okay. It's not impossible. You can do it. You mean all you're doing is you're taking your one good trade and you're breaking it down into little bite-sized pieces as it's going to its destination. That's it. That's it. And if you need more help, the 3-week boot camp is here. The 6-week boot camp is here for y'all. Of course, we're gonna go through all of this. Okay. What's up, y'all? Did that help you? Was that good? I think I did a good job, guys. It was pretty impromptu. I know there was technical difficulties, but what's up? Did you guys like that? Eric said, I needed to know. No problem, Eric. Mick said, thank you, Ryan, breaking it down. No problem, man. Monica said, appreciate it. No problem. Linda said, thank you. No problem. Can it be done on 30? Curvin, of course it can be done on 30-minute, man. But just know, for me, my entry time frames are usually the 5 to 15-minute chart. So it's going to be harder for you to scale in on the 30. But can it be done? For sure. It can be done on any time frame, my brother. Right? But the smaller the time frame, the more entries you can have, because you're breaking up that bigger move into smaller bite-sized pieces. So you definitely have to have an understanding of, again, the intraday move, the macro trend, and then now you're going to like the smaller time frames to get your entries in. Okay. Eric said, just what I needed to know. No problem. Shakira, no problem. Tiff said, helped so much. Glad it helped you. Deja said, my goal is 10%, 60% a day would be lovely. Exactly, Deja. You could do it. I promise you. I believe in you. Let me see. Thank you. No problem, Silky. Dr. Rob, I see you. I see you. I definitely have a formula to it, guys. It's not like it just happens randomly for me. When I build small accounts to big accounts really quickly, there's a method to the madness. It's not just, I put a big lot and think I'm gonna put 10 lots and try to ride this thing out. Like, it doesn't happen like that. It's not like, you get lucky. Okay, you don't get lucky in this market. Trust me. If you don't get, like, one thing I learned about this trade thing is you don't get lucky, and if you do, it's very short-winded. It's short-lived. All right, you don't get lucky for too long. You get lucky once every 200 trades, where you just throw a heavy lot, perfect sniper entry, and it goes like 200, 300 pips. You're not like, and you grow your $200 account to 5K in like 2 days. Like it's very short lived. Okay, that doesn't happen on the regular. So if this is something that you're trying to truly master, again, I broke down the PowerPoint for you guys, showing you that you have to really get good with your entries, exits, right? You have to understand your risk on your pair, on your entries. Okay, you have to have the time confluence. Okay, so we're just gonna go back to kind of just what I said here, right? The trade plan, what's your risk? Those are the most important things here. Make sure you're trading your right time, confluence, your trade plan, and then we can say, make 3 trail your positions, or trail your trades, and then number 4 is have TPs, which is take profits. Okay, so whether you're manually trailing your entries and all that, that's fine. You can manually trail it. I have it automated with my system, which again, I'm going to give to my TTA members. Okay, but so you can trail it, but you have to. You absolutely have to. And the reason why I'm telling you have to is because just a good example here, and again, just in the same example that we looked at, hold on. Right, it popped once it hit our TP or close to our TP. Look how quick it just popped. Wow. Now imagine this. Imagine you weren't trailing at all, and you were like, oh man, I was holding, I think AU's gonna go all the way down here, Ryan, and you just held all these positions and it popped out here, maybe took out your stop loss and all of that, and then you're like, oh no, right? And then look, now you're, wow. That happens. It's happened to me so many times. So like, as you're scaling in, guys, you have to manage this thing to the T. You cannot afford not to manage this properly, especially when you're on a small account. When you're on a small account, you have more to lose. You have to be so accurate. You have to be so sniper with your management, with your entries, with your exits, because you're trying to grow account fast, right? So you don't have the leeway that most traders have, okay, which is capital. You're already at a disadvantage. So though it's not only about, okay, getting these perfect entries and scaling in and I hit my TP, but also what are you doing in between? You have to manage it properly, and that's something I can't teach obviously right now. That would take a whole another 2-3 hours on how to manage this properly. But just so you guys have the formula and understand what to do, and how to do it, I at least want to give you guys the sauce on that, So yeah, test it out, Randall. Again, test it out, my brother. See how you do. What I will say though, guys, okay, is that when you go to tradeauthority.com, look, tradeauthority.com right here. You scroll down. Premium mentorship starts June 1st. The boot camp. You click here, right? It's only 3 weeks. Okay. 3 weeks for $222. All right. What is that a week, y'all? Like $70? Okay, $70 a week. Ask yourself this. Put it in the chat, y'all. Do you think y'all are gonna make more than $70 a week with me live sessions every single week? Yes or no? Put yes or no in the chat. If you trade with me a couple times, if you trade live with me a couple times a week, do you think you're gonna make more than $70 a week? Even if you have $100 or $200 account, yes or no? What do y'all think? What do y'all think? I'm not even gonna say it. Okay. So is there no excuse to get in the premium mentorship, y'all? There's no excuse, right? I'm just tell it to somebody who's skeptical or someone's like, oh man, this is awesome, but I don't know if I should get it. Think about it like this. You can't afford not to be in it. That's straight up. You can't afford not to be in this. Okay? Because there's no way that you're gonna get 3 weeks this intense with mentors that actually know what they're talking about, that actually care about you for this price. Okay? Trust me. We could have added another 2 here, made it 2,000. You know, I'm just saying. People would have paid for it for sure. So we try to literally make it affordable for everybody. And there's no way that you're not going to get value out of these 3 weeks if you take it serious. There's no way. Absolutely no way. Right? So if you want the premium, as you should get in, if you're not in, you should. There's no reason you should not. $70 a week. You're going to be trading live with us. Look, if you don't believe in the trading that me and Max do, okay, then just go look at, I don't know, the past 5 live sessions we did back to back to back all this whole week. What are you talking about? You can go to the YouTube and literally look at every recording, and you tell me if I suck at trading. Maybe I do. Maybe that's what you think, and you know, I guess I go look at my recordings. I mean, you know, I'm just saying, maybe I know a thing or two after 7 years in this. You know, I'm not making millions a month yet. Just know that yet. I'm not making millions a month yet, but I know a lot, and I've made a concern about money, and I can definitely help you get to that next level. I'll say that for sure. Right? Disclaimer: I can't tell y'all how much I make. All right. But the premium mentorship is there. Okay. And then if you guys want the VIP, and this is for those, so there's 2 mentorships, guys, June 1st. The premium, which is only $222, $70 a day. Get in. You feel me? I wish I had this when I first started trading. I promise you, I wish I had it. I wish I had a mentor rocking with me in a boot camp who actually would look at my trades, show me what I'm doing wrong, and really like feel like I'm getting the help that I want for a low ticket price. You know, because usually for that type of stuff, you're gonna pay $1,000, $2,000, $3,000. You're only gonna pay $222. Okay. So, now for those of you who want the VIP is obviously, as you guys know, like 1,000. Okay. Now the VIP, this is like okay, you're with the premium, you're getting the entree. With the VIP, you're getting the appetizer, you're getting the wine, okay? You're getting the dessert, you're getting the massage back rub while you eat. You're getting all the luxury while we teach you and help you. Okay? Because now you'll have direct access with me and Max for 6 weeks. 7 weeks technically now. Okay? So think about what that value is, having not one but 2 mentors on you. 2. All right. So a lot of people want to get in my private mentorship. That's closed. I'm not doing that. My personal private mentorship is closed. I'm not accepting students. This is the only thing close to it that I can help you guys with on that type of level. Max is the same way. Her private mentorship is closed. She's not accepting students, but we decided to do this together. It's the first time we are doing this together, where we're going to take a select amount of group, really work with them privately on a one-on-one basis, and the group on a very intimate basis. So if you need that real one-on-one type of accountability, and you've been stuck for a year, 2 years, 3 years, and you're like, yo, I need someone to really kick my butt and to really get me in gear, like this month, this is what you do. You take that and you invest into yourself. Okay. Something that you should never be frugal with is in investing in your education. People are going to pay hundreds of thousands of dollars for college and all, you know, and get in debt of hundreds of thousands of dollars. 50,000, 60,000, 100,000, 200,000.
for something that's not guaranteed. But then people sit there and tell me, "Oh, I don't want to invest $500 or $200 into my trade education." What? What? I don't want to invest $1,000. What? Okay. You know, like I've invested tens of thousands of dollars, y'all. Tens of thousands of dollars when it comes to education. Tens of thousands. And I'm not saying like, oh, to flaunt or anything. I'm just saying though, even when I didn't have it, y'all, I sacrificed because I've been training for a long time, and there's times where I was like, strapped for money. Let's be real, we've all been there. You're trading, you're strapped for money, or maybe you're there right now, right? You're strapped for money, and you're like, damn, like, I want to do it, but I don't have it. Okay, like figure it out. Like make the sacrifice. If I told you, yo, this would literally change your life in the next month, 2 months, find the money somehow, you would find it. You would find it, right? You wouldn't give me an excuse. If I told you, if you do this and in a 1-2 months, your trade game is going to go to the next level and you're finally going to withdraw, how much, literally, what price could you put on that? And I'm telling you, for a lot of people, that's going to happen. I can't promise that for everyone, but I'm telling you, for a lot of people, that's going to happen in these next 3 to 6 weeks. They're going to go from struggling, not withdrawing, to, okay, I'm finally withdrawing. I have stability in my trading, and I know what the hell I'm doing. You may not be perfect, but you're going to be 10 times closer to it. Way faster than you ever would by yourself. So I'm just being real with you guys. This is something that I'm very proud of. I know we've already put so much into it. It's actually already completely done. We're just trying to structure out the schedule for you guys. All the video content is done. As you guys can see here, you get the advanced course, lifetime access to everything, trade reviews, advanced trading strategies. I have strategies and things I've never taught. I'm going to teach in there. Max is going to teach. I know a few things that she's never taught before that she's going to release. So it's a lot of things that we both are going to pour into y'all to get you to the next level. And, it's not, it's that 1-2% that we haven't given, that, we give y'all 98%. We can't give y'all the full 100, right? But for those who take the VIP, we're going to give you the full 100%, everything. Okay. So for those of you wondering, okay, is it worth it? It sure is. And you guys will see the testimonials afterwards. So I'll post the link in the chat for those of you. If you guys want to message me about or ask questions, you can hit me on Ryan Grinds on IG. Okay, hit me on IG. Or you can message us at thetradeauthority@gmail.com. If you want to email us, which I will type in really quick. The trade authority at, if you have any questions about anything or need any help signing up or any problems, you can email us, guys. So if you have any problems or you want to ask questions or you're not sure about something, a good way is to just message. If you want to speak to me directly, you can probably do it on IG. But in general, if you just want to email and really get a speedy response, then just email us at the Trade Authority. Okay. And that's really it, guys. Like I hope you guys got value out of this. I mean, again, it's really just to help y'all. This is what you guys want. It's not what I wanted to teach, but clearly you guys need help with this. So did you guys get value out of this? Did it help you? Hopefully it did. Sherry got the VIP. See, what's up? Shout out to Sherry. Let's go. Diamond said this session alone value more than 100. Diamond, it really, Diamond, think about it. I put the PowerPoint together in like 30 minutes for y'all, right? And then I get, listen, man. I made the whole PowerPoint for y'all. I did the whole breakdown, whole 2 hours. What? Well, yeah, just this alone is $100 for real. What? Fire. I wish someone taught me this when I was learning how to trade. Shit. Shirley said I need the times of VIP. I'm signing up for the premium, but no problem, Shirley. At least you're in. At least you're in. That's the most important thing. Look, if y'all don't have the VIP money, I understand. There's been times when not. Okay, I get it. But don't tell me that you don't have $222. Don't tell me that. Don't tell me that. If you don't have $222, then you better be unemployed and you better be in McDonald's right now off of Wi-Fi, okay, using somebody else's phone. Like, it better be that bad. Okay, it better be that bad. It better be that bad. Okay? Because think about it. If you're a trader, right, and your goal is to make money, but you're cheap when it comes to your education on how to make money, are you really serious? Again, if you're struggling and need help. I'm not cheap. Like, if I have a mentor and they told me $10,000, I'd figure out a way how to get it. 5,000, I don't, whatever the price, I'm gonna figure it out. That's just how I'm built, because that's how bad I want it. And if he has or can show me how to get to that next level and has what I want, I'm whatever the price I'm paying. It's not about the price, it's about that value. What are you putting your value on? Everyone puts value on a lot of things they don't need, and this is something that you may need. I'm not saying that you do need it. I'm saying you may need it. You know, so it's for you to determine that, young grasshopper. But what's up, y'all? Talk to me. You know, I'll answer questions. I'll rock with y'all for a little bit. See, if this was max, the session would be over. But you know, y'all rocking with me. So what's up? I'll talk to you guys for a little bit. Tamara said, thank you so much. Super helpful class. No problem, Tamara. Risk percent, or he said risk percent equals stop loss, lot size, value. No, risk percentage exactly like your stop loss, right? So if you're risking 1%, let me see, was that Roy? What's up, Roy? So Roy, like what we're saying here is like this is like 10 pips. Like our first entry here, right? We put a 0.05, right here. And this was a 10 pip stop loss. Okay. So with a 10 pip stop loss at 0.05, that's what? $5, right? What do we have? $100 account. So that's 5%. You see what I'm saying? Right now, a lot of these trades, it's not even the full 10 pips actually. So it's actually like, you know, you could have actually went higher a little bit if you had, you know, your stop loss at 7 pips here. There was like a 7 pips here. This was like another 7-8 pips here. You know, we're just gonna roughly say it's like 10 pips stop loss on each one, but really it's, you know, 7 pips here, 8 pips here, whatever. Let's see. Renee said, I didn't have it unemployed, but I borrowed it and plan to be able to. Yeah, Renee, you ain't listen, girl. You're not going to regret it. Let me tell you that right now. You're not gonna regret it. Shout out to Renee, y'all. I'm gonna show Renee because Renee, she's a fighter. You feel me? She deserves it. She said I borrowed it. That's real. You think I ain't do that too, Renee? I've done that too. The hell? Listen, bro, I need to borrow like a quick little 200. I got you in like 3 weeks. Kind of like, yo, whatever it takes. I've done that. If it's that bad, and it's that if I really need it, like, yo, okay. Shout out to Renee. I'm gonna see you on the inside. I'm gonna make sure you're good, Renee. You feel me? Let me see. Diamond said, how many of us already in premium can upgrade to VIP? You can just email the Trade Authority at gmail.com, Diamond, if you're in premium and want to upgrade to VIP. Just email us. Yes, we have to do what we can get. Exactly, Erica. So, and that's what I'm telling y'all, like, get in, y'all. What is the 3 week or 6 week? I promise you'll be worth it. It's gonna pay for itself. It's going to pay for itself tenfold. Like you're not gonna come in here and be like, oh man, I wish I didn't pay that 200. Like you're not gonna say that. The only way you're gonna say that is if you pay the $200 and you do absolutely nothing. Don't go to any sessions. Don't watch any videos. Don't message me or Max at all, and you just do absolutely nothing. That's the only way you're gonna waste your money. And if you plan on doing that, don't sign up. I don't even, you know, I don't even want your money if you don't plan to even be serious. I like, I don't even want that for you. I'd rather you keep your money for real. Um, let me see. Diamonds, I really appreciate. No problem. Let me see what you guys. Zachary says so much sauce in session. Thank you, Zach. Appreciate that, man. CC said, "Will Coach Max be teaching in the sessions as well?" Of course, CC. It's gonna be both of us. So sometimes it's gonna be just me. Sometimes it's just gonna be Max. Other times it's gonna be both of us combined. So you're gonna get both of us, and that's the beautiful thing about having two. Well, Max and myself working with you guys is because I can't do everything or like do sessions every day with y'all. But because it's two of us, we can kind of bounce off each other. Like Max do one day, I do one day. Then certain days we're gonna do together, and so we can. So Max can take a break in between things. I can take a break in between things, and we really can space things out. But at the same time, give you guys a full course load of things to do every week because you're getting both of us. If that makes sense. Right? If it was me trying to do everything, if it was me trying to give you guys the course, the videos, the sessions, the overviews, the Q&A, I would get exhausted 3-6 weeks in because it'd just be Ryan. And you guys have a bazillion questions for Ryan. I got to check all your trades. Ryan. I would need help. Help me, So again, it's the benefit of having two of us because we can really work with you guys like on a full-time basis, but not get exhausted, which I think is dope. Sherry said you're going to lose more blowing your account. Exactly, Sherry. Like you're going to give the market your money somehow, whether it's education or you're blowing your account. Okay, so I would much rather invest in education, so I have less likelihood of blowing my account. Think of it like that's why you should not be cheap with education because half of y'all are blowing accounts anyway. Half of y'all are blowing $200-300 a month anyway. So why are you holding on to it like it's your last 200? Okay, when really this could be that game changer for you to be like, okay, instead of blowing $200-300 a day, I'm withdrawing $200-300 a week now. It can really be that for you, but you have to trust it. You have to trust the process. Okay. McKinney said about what time would be given the sauce. The time. So the times aren't set in stone, my brother, yet. But we will send the schedule out for everyone once you're in. I promise. Roy said 21 day habit. Exactly, Roy. You already know the philosophy, my brother. It takes 21 days to form a habit. That's why we have this 3 weeks. It's gonna help. Well, technically it's gonna be 4 weeks now. It's actually gonna be 4 weeks and 7 weeks. So you guys will have a full month with us. All of June you're rocking with us, y'all. Like on a full-time basis. Think about what that can do for you. Tamara said, will you do a session on how to manually trail with your software? Yeah, exactly, Tamara. So if you don't have my my software, my risk management software, which I'm gonna show you guys and help you guys get it if you want it. But even without it, yes, I'm gonna show you how to manually manage it and trail it and really get it manually. Basically, you're gonna manually trail it. Obviously, if that's what you need, that's what you need to do. If that's what you need to start off, okay, cool. You got to start somewhere, right? So you don't have to get the software. You have to figure out how to do it manually. Okay, cool. Yes, of course I'm going to show you. And it can be done manually. You don't need the software. The software does help a lot. Don't get me wrong. But do you need it? Yeah. I need it. At the level I'm at, I need it. But you know what I'm saying? You can do it manually. It's just going to take more effort. Okay? But yes, I will show you, of course. So don't you worry about that. Prince. Look Look, Prince said, "Look, y'all." He said, "I had to borrow my VIP money this morning from the mob. Help me keep my leg, bro. Don't say that, man. You putting pressure on me, man. I don't want you to lose your legs, bro. Prince gonna lose his legs, y'all. All right, now I gotta hit every trade for you in June, bro. Every AU trade gotta hit just for Prince. Like, yo, every NAS trade, every AU trade gotta hit. We're not playing. Eric said, "How do we get the software?" Once you get into the 3-week or 6-week program, I will show you, my brother. It's not open to the public. You got to get inside the club, okay? You can't be outside the club and think you're gonna get bottles. What's wrong with you, bruh? What's wrong with you? Thinking you outside the club trying to get bottles. Nah, don't work like that. You gotta get in, my guy. But once you're in, I will, and once we start, I will show you guys. Let me see. Any more? I'm looking at the questions, guys. I'm looking at the chats. So let me see. Ricky Diamond said, "What platform will use to communicate the schedule to us?" So for our VIP, we're going to use Discord. For our premium, we'll be using Telegram. But also the Trade Authority has an app and our whole platform as well too. So like we have our platform, we have the app, Telegram. So it's going to be multiple forms of communication. And with our VIP, we're actually just going to use Discord exclusively for our VIPs. Lisa, you love the compounding session? No problem, sis. I'm glad you liked it. Eric said, "You in?" Okay, got you, bro. Then you have nothing to worry about, my brother. You know I got you. You good. You in the club now. Oh man. All right, guys. Let me see. There should be 152 likes on this video since there's 150. You know, I don't really care about the likes, CC. Thank you though. You know, it's I really appreciate y'all for showing love, and I really want to show you guys everything that I've learned and how I can help you guys in the next 3-6 weeks. I really know for a fact that it's going to change your guys' trading forever. It's going to change your guys' trading. You know, if you guys thought the 7-day intensive was good, and a lot of you guys were in the 7-day, right? If you thought the 7-day intensive was good, wait until you have us for 4 weeks and 7 weeks. Yeah. So for a whole month. And you know, we were basically doing we did the 1 week for $77. You know, imagine have us for a whole month to 2 months, basically 1 to 2 months. I'm telling you, you're getting everything. There's no stone unturned with this. This is like everything. This is everything you ever wanted. Like, okay, you want the personal mentorship. Okay, you want the live sessions. You want the courses. You want the Q&A. You want the everything in a very well-structured, well-organized, thought-out, meticulous program that's going to level you up and really show you the game of trading. Like, you don't have to go any farther from here. I promise you. Like, we have all of that. You just have to take the leap of faith. That's it. That's it. I'm getting on VIP. It's worth it. Like, again, most of y'all have blown more than $1,000. Think about it. Most of y'all have blown more than $1,000. So what's $1,000 in your education to change your life, your trading life forever? Forever. You know? Cassandra said 7-day was gems, 21-day going to be gems and jewels. Exactly. Was the 7-day not fire, y'all? That was the teaser. That was like that was like baby. That was nothing. Okay. That was like your appetizer. You didn't get the entree. You didn't got nothing. That was nothing. That was literally nothing, and it was still good. Okay, I'm just saying of like what we could have given y'all, but because it was only 7 days, it was hard to to give you guys so much in 7 days. But we, as you saw, we made it very jam packed for those 7 days, right? So imagine you now have a whole month and we're trading together. We're doing chart markups together. We're doing Sunday review sessions together. We're looking at your trades. You're having accountability sessions. We're journaling, trade plan, prop from trading. Boom. You know, we have freaking trade manager. Boom. Whatever you need. I got what you need. But you say, I'm just a friend. You say, I'm just a friend. Anyway, no problem, Roy. Appreciate you, man. He said, thanks for the knowledge. Andrew said, yes, the 7 day was fire. Cool. Thanks for the class. I wish I could attend the 4 and 7 week. It's okay. I will not have the time to focus on them. It's okay, Steph. Next time, you know, it's okay. In the meantime, we have again the free boot camp in TTA, you know, and we'll still put up free content here and there, and I'll still have like free classes here and there, you know, this month very sporadically. So you know, we'll still put up content and still try to help you guys, even who aren't in there, you know. Queen Terry said, does our live account need to be active by the first? Oh, I mean, you don't need to have a live account, Queen. I would advocate you have it, but it doesn't. You don't need to have it. We won't start trading live actually until the second week of June. So the actual live trading won't even start for the first week, because the first week we need to make sure you guys have everything ready. You have done the homework, like a whole bunch of stuff that we're gonna make you guys do, and make sure you guys have done it correctly, so you guys are really prepared. And then the following week, so the first week is really getting you guys together, and then the 3 weeks following are really going to be okay. You know, the course, the training, the live trades, the all that for 3 weeks. Okay. Let me see. What is the deadline to sign up for the first? I just got back from a week. I'm trying to get myself together. I'm tired. I hear you, CC. Well, the deadline is the first, but we may stretch it just a few more days to get people in. But you know, it's not like you have like 2-3 weeks. You know, again, just email us if you have any concerns, or you know, maybe need an extension personally or something like that. Just email us, thetradeauthority@gmail.com. We got you. We'll figure it out. Just let us know. I know, and you know, we know you the homie. You're one of the day ones. We're gonna make sure you're taken care of. Good. Thank you for clicking the like button, y'all showing love and everything. You know, I appreciate it. Teresa, good night. Thank you. She said, great class. Appreciate you. She said, good night, Ryan. Great class. Appreciate you, Teresa. Appreciate you. Karen, no problem. Look, Karen said, that's for you, Ryan. Thank you. Any last questions, my beautiful people? Hopefully you guys got some value. This is recorded, so it will be in the on the YouTube, so you guys can review this at any time for free, of course. So no problem, Ingrid. Thank you, Andrea. I really appreciate that. You know, I need those prayers. I'm not gonna lie to you. You know, I've been praying more to God, tell him to give me the strength and the clarity I need to teach proficiently and get you guys to the next level. You know, that's all that I ask. That you guys get your breakthroughs that you know that you need and want. I'm really praying for you guys too as well. If you guys haven't, please subscribe to the YouTube. Thank you, Good Life. If you guys haven't, please subscribe to the YouTube. You know, hit the like button if you can. I appreciate that. That's love. We got the account. I think it's at 2,000 followers now. It's pretty dope. You know, we're at 2,000 already. You know. Sir, was a nice session. Thank you, sir. My dear, appreciate you as always. I'm gonna take a loan for the Ray said I'm gonna take a loan from the loan shark. Listen, man, it'll pay itself back. So I mean, do what you gotta do, my brother. There's been times, listen, there's been times when I've had to take loans for things. Well, from people or um, had to sell things. I'm like, yo, okay, I don't really need this. Let me try to get the money somehow. Like seriously, if it's that important for you, you'll make the sacrifice, man. No problem, Brandy. Diamond session was that you liked it, and this is all for free. Okay, imagine what I'm doing for paid, y'all. This is all for free. Think about it. I'm glad you guys got help though. Taylor Harrington, she said, thanks, excited for the prop firm trading. Yes, we're gonna also, so you guys know, we're gonna do prop firm training as well. That'll be catered more to the end of it. But yeah, we're gonna have a whole kind of like week just on prop trading. Because a lot of you guys are underfunded. So even if you know how to trade, but you don't have 1,000, 2,000, 3,000, 4,000 put in an account, right? Instead of putting 200-300 in a broker, you can pay $200, $300, $400 for a prop firm trading account and get 100,000 or 50,000 or $25,000 from a firm, and then trade their money and make like 70% of the profit. So there's a lot of ways to make money from your skill, but you have to acquire the skill first. You have to be good at it. Not just good, you have to be proficient, and you have to know what you're doing. So to get to that level is usually why you need a mentor. Like you can be good, but to get really, really proficient and streamlined, you usually probably have to have a mentor, someone who's going to really guide you. Okay, Charles said, "Why do brokers only accept Bitcoin as it's only down in value now?" What's up, Charles? So it's just the main way to accept for most brokers because it's just easier, man. It's through cards, there's fees, there's transaction times, there's people doing chargebacks, there's all types of things, man. All types of problems that have little cards a lot. Unless it's super regulated market and country. So because most of the brokers that most of us trade are offshores, that's why they prefer Bitcoin. Stephanie said, thanks, no problem, Steph. All right, so appreciate you guys. It's 9:30, so I gave you guys 2.5 hours of my life, and I hope you guys got some value out of that because you guys gave me 2.5 hours of your life as well, and I'm appreciative of that. I thank you guys for rocking with me. All of you, I really do. No problem, Karen. Thank you. Charles, thank you. Steph, thank you. I appreciate all you guys. All right. So again, go to thetradeauthority.com, guys. If you haven't, to get info on the mentorships, the VIP one and the premium. And if you have any questions, you can just email us at thetradeauthority@gmail.com. Okay, that's our email. And yeah, we're pretty much done here. Glad you guys got value. Broke down like just my entry technique, my entry strategies. Again, like just to reiterate one last time before I go. Let's. Okay. Whoa. What the heck? I like. Oops. I messed up my chart. I messed up my chart, y'all. It's trash now. Let's see. Oops. I don't even know what I did to my chart. Help me. Sweet baby Jesus, help me. Look, I can't even see nothing no more. I'm gonna figure it out. Okay, it's up. It's all the way up here. Let's see. Did we do this one? No, I think it was this one. And no, go to the 1 hour. Here we go. Woo! Almost had a heart attack. Almost. I didn't, but I almost did. All right. So when it comes to compounding, small accounts, again, $100 as an example, right? That's what I kind of used here. Make sure you're trained. Number one, make sure you're trained at the right time. Nothing even matters if you're not trained at the right time, right? So if you're not training your pair at the right time, you're already lost. You're already putting yourself at a disadvantage in an already market that's pretty much created for you to lose money. So not a good idea, right? Number two, then have your trade plan, right? Have your trade plan kind of structured out, written out, figure out what you want to do, right? That's why I kind of have the compound daily just to figure out the numbers, like what's your goal by the end of the week or the end of the month or whatever you're trying to do. You need to kind of figure out, okay, what do I need to hit every day? 10%, 16%, 20%? What do I gotta do? Okay. Then you figure out your entries, 1, 2, 5% per entry, right? And then the management side of it is you're trailing your trades. You have your TPs, your take profits, right? And you do that over and over again a few times, a few trades, 4, 5, 6 trades, you will see easily how that $100 will turn to $200, $300, $400, $500. If you get a few trades like this, scale it properly, manage it properly, and you know what you're doing, easily it can be done. Okay, and that's how you compound. Again, more like I'm going to go into this more detail in the 3 week, 6 week guys. Like, of course, way more in depth than this. And in the 3 and 6 week, you guys will see me do it live too. So that's another benefit of what I'm going to do for y'all. So for those who really trust in me and Max for the 3 and 6 week, you're going to see me trade and compound live for y'all. So you'll see my entries, you'll see my lot sizes, you'll see exactly how I'm getting in and how I'm getting out. You'll see everything. You'll see my risk management software, how I use it. All of that is on the inside. Okay? So that's what we're going to do. We're going to go hard in June and July. All right? No problem, guys. No problem. Have a great Memorial Day weekend, my beautiful people. Love you all. Take care. See you.